Hi, this is Mark. We're going to talk about Bitcoin for financial advisors today. I've been really looking forward to this. It's something that I've not been able to cover in all the videos that we've done. This video series is for financial advisors, professional financial advisors who deliver comprehensive financial services to their clients. Recently, we've done a series on AI. Now I'm doing a series on Bitcoin for financial advisors. Today, we're going to do something that's a little bit unusual, but you'll have to play along. It is going to end up that you have a much better understanding of Bitcoin, how it functions, how it's been functioning for 16 years now. And then we're going to talk about how Bitcoin is being driven by, yes, supply and demand, but also the fact that it's not inflating, it's not devaluing, it's not debasing. Unlike any other currency in the world, it is just fixed supply, never getting any more. We're going to cover charts and also a few fun facts, just showing you how just everyday things are priced in Bitcoin if you were on a Bitcoin standard, living day to day on Bitcoin. But we have a lot to cover. Let's get to it. When you're considering any asset class, the first question you have to ask yourself is the asset class an appreciating asset or a depreciating asset? Especially when you're approaching asset classes that you're unfamiliar with, alternative asset classes. So, what do you think? What do you think? Bitcoin's been around since January 3rd of 2009. What's it been doing since then? It's been appreciating. That doesn't always tell the whole story, but my heart rate, if I put it on an EKG, it would show it's going up and down, but it's not going anywhere. Hopefully, it just keeps me alive. This is Bitcoin since inception. I marked it over there in 2009. It was in those first few months that Bitcoin was a penny in value. But the way I always evaluate an asset is by looking at its trends. So let's take a look at this right now. You look at the chart, and yes, it's going up, but to the point of what I'm getting at is when you look at the highs, every time it makes a new high, is the new high higher or lower? Did it go high and then it went way, way down, and then the next high is lower than the last high? Or like in this case, the new highs are higher than the previous high. More important to this point is I like to look at the lows. So after an asset makes a high, what's the next low? And then after the next high, what's that next low? And what you're seeing here is a trend of higher highs and lower lows. The trend is pretty obvious. This is an appreciating asset. So I want to switch over to just talking about the free market system and make a statement and just see where it lands with you. The natural state of a free market is deflation. Now, I've made this statement to lots of financial advisors, and everyone just nods their head and goes, yep, natural state of a free market is deflation. But what does it mean? Why are we seeing inflation? We're taught in economics in college that inflation is required for a healthy economy. If you don't have a little bit of inflation, the economy's not growing. And you don't want too much inflation, because if inflation gets overheated, then the market slows down as far as the economy. But for the most part, prices don't go down, they go up. As a matter of fact, when we're taught economics back in college, they tell you that deflation is a very bad thing. It's something that happened to America back in the Great Depression, and we never want to do that again. The point I'm going to make is we've never lived in a free market. I'm going to prove to you right now what I mean by that. See, what happens in a deflationary economy is that prices are less every year. Just take home prices from the town that I just moved away from. I just moved back to Texas. I'm from Texas. I grew up in Texas. I went to college in Texas. But for 15 years, I lived in California. I'm going to show you how home prices are actually going down in the town that I just moved away from, La Jolla, California. Now, for those of you that never heard of this village, it's a part of San Diego. It's in San Diego County. It's right on the ocean. That little horn right there, that's the village of La Jolla. You can see all the streets going back and forth, and you could see where I lived. I lived down in the slums in the village, in La Jolla Village for 15 years. Now, that little pen marker that you see there, that second place is a house that I looked at. I lived in a condo. I raised my daughter there, but I was looking at a bigger house at one point. And you can't tell from this, but it's up on Mount Soledad. So in La Jolla, the whole thing is about being up on Mount Soledad with your house and you get the spectacular view. So this is the house that I was looking at. As you can see, it's got a gorgeous panoramic view of the Pacific Ocean. It doesn't look like much from the front. That's because it's on an angle, so they could fit it on the mountain. As you start to look at the house, it's nice. A small front yard, but inside it's very comfortable, very open. The rooms aren't that big, but let's just say it's very nice. I would have loved to live there. The problem is, let's go analyze the numbers on this house. When I looked it up, that house, believe it or not, was built in 1932. It cost $12,000 to build in 1932. That house cost 12 grand in 1932. Every car I've bought, except for the first one when I was 16 years old, cost more than $12,000. Then in 1978, the house went for $287,000. Okay, that's a big jump in years, but I think you'd agree that's a big jump in price. I moved to La Jolla in 2005. So I looked at it in 2009. 4 years after I moved into La Jolla, I looked at this price on this house. It was $3,017,000. Now, maybe I'm crazy, but I moved from Texas. I'm used to houses like that, 375, maybe 575, not $3 million, but I realized you're paying for the view. It's the view of the ocean that you're paying for. So I almost put some money down on that house. And in the last minute, I thought, I'm not paying $3 million for that house. So I didn't buy it. 2014, the price on that house was already $3,458,000. By 2019, by the way, I didn't move out of La Jolla until 2024. But I was still living in La Jolla, but I was keeping up on the price of that house. It was already up from $3 million to almost $5 million just in 10 years. And then by the time I left La Jolla, that house was listed for $6,900,000. So we're talking about a house going from $12,000 to $6,900,000. What is your experience with house prices? Is it something like this? You look at it, it looks shocking when you look at it all at once like this. But in your mind, do prices of houses go up a little or a lot? Because it's La Jolla and because the supply and demand issue is such a big thing in La Jolla, there are very few houses with views like that. So it's going to go up in price just because of that. But what you're also looking at here is inflation. We've talked in other videos about how in the US, for my whole lifetime, and the monetary inflation rate has been since 1932, average 7%. Now, back in the 70s, see where it says 1978 to 2009, that big jump, the whole 70s and much of the 80s had high inflation. I got out of college in 1980. Home mortgage loans were like 18%. It was really a lot of money that was printed that we don't have, but nevertheless, it inflated prices and it inflated assets. So what inflation does is it inflates prices and assets. So there is buried inside these increases in housing prices, the effects of inflation. It creates a bubble in assets. It distorts housing, real estate, gold, any kind of asset that people would put their money in and not keep it in the dollar. All these other assets have inflated prices. Now, what I wanted to do in this video is to show you what prices would be priced in Bitcoin. 2009 is the first time Bitcoin was launched. It was launched in January of that year. I picked June 3rd just to pick a date during the year that we would always price Bitcoin in this example. So on June 3rd of 2009, Bitcoin was not even worth a 1 penny yet. It was 0.0009 of 1 penny. So at less than a penny, but still having some value, that house would have cost, yes, you're reading it right. That number is $3,352,987,778 Bitcoin. That's what you would have paid in Bitcoin back when Bitcoin was worth under a penny. Now, flash forward by June 3rd of 2014, Bitcoin's already up to $640 per Bitcoin. So that same house, if purchased in Bitcoin, would have been 5,403 Bitcoin. By 2019, the price of Bitcoin was up to $8,200. Now that house priced in Bitcoin was 596 Bitcoin. And then finally, today, that house, Bitcoin's priced at $106,000 currently. That house would cost 65 Bitcoin. So what I want you to notice is priced in Bitcoin. If you lived in Bitcoin, if you were like me, where every time you get a paycheck, it immediately goes into Bitcoin. So I'm living on a Bitcoin standard. I only own three assets. I own my company, I own my cars, and then I own Bitcoin. My money is in Bitcoin. I pay my bills out of Bitcoin. So for me, if you were living in Bitcoin like me and you'd have bought that house, you would have looked at it in 2009 and thought, I can't buy that. I don't even have 3 billion Bitcoin. But then in 2014, where I had noticed it in dollars went up about $500,000, I thought now it's just 5,400 Bitcoin. That's starting to sound more reasonable for me. And then flash forward 5 years later, 2019, it's 596. The moral of the story is this: all prices go down in Bitcoin. Bitcoin has a fixed supply. The US government has no upper limit on the quantity of the money supply. When they need money, they just hit the big red button, print some new money. The quantity of dollars is infinitely expanding. We have a deficit every year. That means we're spending more than we're bringing in taxes. So we just print money to pay for it. And when are we going to stop doing that? Bitcoin is driven by this inflation. What's really happening with Bitcoin is Bitcoin staying the same, and the dollar and every fiat currency around the world is inflating because they all print money, and it's devaluing against the Bitcoin. So what you're seeing here is the drop in the value of the dollar. You're not seeing an increase in Bitcoin. It's really Bitcoin being the same, but when you use Bitcoin to buy dollar denominated assets, they go down. Now, I want to show you, this is a chart of housing prices in the US. This is median housing prices. I took this chart from a website that tracked it back to the inception of Bitcoin, 2009. So this chart shows how the median US housing price, when measured in Bitcoin instead of US dollars, has literally collapsed over time. The blue line is just simply the price of Bitcoin. It's gone up massively. If I tell you how much, you won't believe it. It's 84 million% since 2009. So it's appreciated dramatically since inception. Now, this red line is housing prices in Bitcoin. It starts back in 2009, and as you can see, it's a steady decline. You could buy more house for fewer Bitcoin over time. It's going to continue all over the country in all regions of the world. You could buy more house for fewer Bitcoin. The green line is the median US house price in dollars. So if you look at that green line, it shows that the cost of a typical house in dollars has risen steadily. It's hard to see because the Bitcoin distorts it so dramatic, but that green line, the housing price, that shows that since inception of Bitcoin, housing prices have gone up 122%. So the median house price has doubled, more than doubled, from roughly $170,000 back in the inception of Bitcoin to over 370,000 is the median house price today. So the moral of this chart is if you saved in Bitcoin instead of dollars, real estate just gets cheaper for you, not more expensive. You can see the trend of housing prices is going up in dollars and down in Bitcoin. Now let's look at the next one. Oil prices. So this is gasoline. I want to go through a few ordinary things that we all spend money on. Let's call it housing, energy, which is heating and air conditioning and gasoline, and then food. The red line is oil priced in Bitcoin. It's crashing. The green line, again, down at the bottom, is oil priced in dollars. It stays flat-ish over time. The dollar's losing a purchasing power is really showing up in this chart, that the dollar price of oil is going up. And if priced in Bitcoin, every year you pay less for oil. But the point is, in Bitcoin terms, it's infinitely cheaper because Bitcoin is appreciated so dramatically in value, but it's actually not appreciating. It's being pushed down by the devaluation of the dollar and every other currency that we see in the world. Now let's look at the Big Mac index. What you're seeing on the Big Mac index is the green line is a Big Mac priced in US dollars. It went from $3.50 back at the inception of Bitcoin back in 2009 to $5.75 today. That's dollar inflation. The red line is the Big Mac priced in Bitcoin. It's going down. The small unit of a Bitcoin, like a penny is to a dollar, the breakdown of a Bitcoin is called sats. It's short for satoshis. The smallest unit of a Bitcoin is called a sat. It's 100 million of one Bitcoin. So back in 2011, it took thousands of sats to buy a Big Mac. Today, it's really inexpensive to buy Big Mac in your Bitcoin. So if you saved in Bitcoin, the Big Mac would become almost free over time. It just keeps getting cheaper and cheaper over time. And that's living on a Bitcoin standard. I wanted to look at gold and we'll start wrapping up here. This is gold going back to the inception of Bitcoin. I wanted you to see, I know gold's gone up dramatically in the last year, especially in the last few months. I don't know when you're listening to this, but this is currently in June of 2025. Gold's gone up dramatically, but priced in Bitcoin. So that red line is gold, but priced in Bitcoin. So if you bought gold with Bitcoin, the gold would be cheaper every year. And now it's getting very low after all this time. But gold might protect against dollar inflation, but it bleeds the value also of Bitcoin. So while gold may be a inflation hedge for the dollar, some feel, Bitcoin doesn't need a hedge. As a matter of fact, you buy gold against Bitcoin, your value is going down over time. But a lot of people ask about gold because Bitcoin is sometimes called digital gold. And I think that's actually a pretty good description of it. I'm going to switch gears and finish with this. Many of you may not have heard of Sears and Roebuck. Sears and Roebuck is a department store. When I was growing up, it was a big department store all over America. It's an American company out of Chicago. What you're looking at here is what's called the Sears Roebuck catalog from 1909. And what people used to do is they would wait for the Sears catalog to show up and they would shop through that catalog just like we look on Amazon today. They would find something they like. They would send a letter to Sears. They would buy whatever they wanted out of the catalog and Sears would send it on the railroad and ship it to them through the mail or on the train. So you would buy things. It was like the Amazon.com of the 20th century is what it was. And you could buy things like, here's a dresser drawer. You notice the one on the left is $14.45. And the one on the right's a little bit fancier, a little bit bigger. It's $15.95. All that to say this monetary inflation of 7% per year, prices should go down in a free market. Everything that goes into that dresser right there, the wood, the glass for the mirror, the automation has made the manufacture and the production of these pieces of furniture cheaper. But are dresser drawers $14 today? No, they're hundreds of dollars. I have no idea what that would cost. What do you think? Maybe $400, $500? I don't know. And the one you get today is going to be cheap wood veneer. That right there is solid wood. So instead of seeing prices go down as they would in a free market, the prices are definitely going up. And Sears even sold a car. You could buy a car in 1909. They called it a Sears motor buggy. And the thing that cracked me up about this one is they advertised that it goes all speeds. It goes all speeds from 1 mile an hour all the way up to the full speed, 25 miles an hour. But in any event, $395, I paid twice for my last new car what I paid for my first house. And what's driving that? The monetary inflation of 7% per year, slowly but surely reducing the value of the dollar, which means prices are going up as a result and asset values are inflated as well. But I wanted to make this point and then we'll close. In 1909, Sears sold homes, believe it or not. You could flip through that catalog and you'd come to a page and they're trying to sell you a house. So what they sold was housing kits. So it was a kit that was ready for assembly. They would deliver this kit right onto your plot of land. They would deliver this kit by railroad. And that kit included literally everything. It had all the walls and the roof and the pipes and the wiring and all the counters and windows and latches and doorknobs and everything. The shelves, not furnishings, but anything built in that came in the house. So this is a full house sold by Sears. All you have to do is assemble it for $2,800. So the house from Sears, the kit, you could buy for $2,800 and they'd be happy to send it to you. All you have to do is hire someone to put it together or do it yourself with your neighbors, the barn raising. But I'm sitting there thinking, $2,800 house, what would that look like? What on earth could a home look like? I found a few. So these are pictures of those homes. They still exist today. This is in Canton, Ohio. This is one of those Sears kit homes. Can you believe this? I saw this picture and I go, you've got to be kidding me. That's a beautiful home. Here's another one, also in Canton, Ohio. They have a historical portion of the city and they've kept these homes because it's so unusual to think these people had this kit dropped on their lot and they just assembled it. There you go. And then there's the last one. So I just thought that was fun. The point of the whole thing is the natural state of a free market is deflation. We've never lived in a free market. That is until now. I just wanted to make the point that in Bitcoin, because the supply is fixed at 21 million, there will never be more than 21 million Bitcoin. 95% of those Bitcoin have already been mined. They're in circulation today. But what happens when you have a fixed supply and high demand? Price goes up. And the price on Bitcoin's going up, but it's not really going up. There is some supply demand dynamics in the price of Bitcoin, no question. But far more significant to my way of thinking is the deflation of the dollar. It's really the deflation of every currency, because if you live in Italy, you price Bitcoin in the euro. If you live in Japan, you price Bitcoin in by yen. Here in the US, we price it in dollars. And dollars have devalued, diluted consistently, on average 7% my whole lifetime. But since the pandemic, it's been closer to 8.5%, 9%. But let's just say on average 7%. It's amazing. If you do the rule of 72 with 7%, take 72 divided by 7%, that means you're losing half the value of your money every 10 years. So you have that client that comes in and says, I'm conservative. I don't want to be in equities. They scare me. I just want to put my money in a treasury bond or a CD at the bank. I want to get a 5-year treasury. Hopefully I can get 4.5 or 5% on that. I'll be happy. And they're happy because 10 years later, when the thing matures, they get their money back, the exact amount they deposited. What they don't realize is what's been happening over those 10 years is they've lost half the value of that money. And whether it's through pricing or trying to buy assets that have inflated, through asset inflation and price inflation, because it just it affects and distorts both, that money is not worth what he put in at the beginning of the period. So Bitcoin, on the other hand, fixed supply, it's never changing. It's actually holding its own. And what you're seeing in the price of Bitcoin is the decline of the dollar priced in Bitcoin. So I hope you enjoyed this, and we'll keep talking about Bitcoin and AI for sure. But don't forget, the theme of this is our method that we've taught for 25 years is to deliver truly comprehensive financial services, but using a method that will consistently exceed your client's expectations. And that's really the objective. You want to not meet your client's objectives, but the more affluent and the more successful your clients are, the more they're looking for you to exceed their expectations. And that's what you should strive to do. We'll see you in the next video.